Let's get into the markets then, Mark, in 3 minutes. And let's start right there. We saw a lot of volatility in Treasury markets as a result of those Credit Suisse headlines. I suppose it's difficult to understand material weakness. It depends, I guess, if it leads to any material revisions. And at the moment, it doesn't look to be the case. It looks as if it could have led to material revisions. So maybe not as bad as it could have been on those Credit Suisse lines. Treasury is certainly reacting to it, though.
Yeah, I was surprised that it had such a large macro impact. I think I kind of missed it. When the first headline hit, I went, woo, and I walked off to get a glass of water, and then I came back to my screens and realized yields had gone completely crazy. So I did not realize this would have a macro impact. I think that shows just how jittery this market is and how much they believe that there might really be a massive banking crisis brewing, and that is something that I definitely don't think is the case. I think we've got to remember that in the US, regulation was stopped for smaller banks 8 years ago because they pushed back that they did not need the very, very tough post-GFC banking that was only needed for the really big, systemically important banks. So there are some smaller banks in the US that are vulnerable. However, regulation was not relaxed in Europe and the UK, and therefore they are not as vulnerable as those smaller US banks, and the big US banks are not vulnerable. That is why, particularly in the wake of what's happened on the weekend in terms of the policy support, I am not worried about a banking crisis right now, and therefore I don't know what financial crisis that other people are out there pricing, but certainly there are some people in the market pricing a financial crisis, even as we have other people like Ken Griffin going, SVB should have been allowed to go bankrupt because the US economy is so strong that there wasn't an issue about it.
Right, yeah, he's worried about the fate of capitalism, isn't he? Michael Burry shares your view. He of Big Short fame, suggesting that he doesn't see any big financial crisis brewing. So if that's the case, Mark, did we oversell European bank stocks? I mean, I was really concerned. I look at Commerzbank down 12.7%, but then I remind myself, actually, that only takes it back to where it was at the end of January. So we're unwinding a lot of optimism around the banking sector over the last couple of months.
I think that gets the fact that what happened yesterday was about position clean out. So only a week ago, the macro community got very excited about a terminal rate of 6%. They were playing upside in yields. Now they've completely switched from that. We saw yesterday just a clean out of positions, and you saw other favored trades get hurt. So European banks is an obvious one. You know, long FTSE, long Spain, long oil got hit massively yesterday despite a weaker dollar and lower yields because it was a favored trade. Same with long Mexican peso, was one of the most hit in the day. So really what yesterday was about cleaning out all the kind of favored macro trades. Where does that leave European banks now? Well, probably they're a little bit discounted, certainly to the story that we had a week ago, and we're still going to get more rate hikes from the ECB. What I think shows the chaos of this market, if we have some banks out there, the same bank calling for a cut from the Fed, as at the same time they're saying the ECB will hike 50 basis points out there, which shows there's just a lot of idiocy in this market right now.
A lot of idiocy, perhaps. A big range of expectations around the Fed now, from cutting 25 basis points in March to hiking by 50 basis points. Briefly, Mark, are you still in shock?
I'm a complete shock. And I still think there is zero chance of a cut next week. They might pause. I don't think they'll pause at 25 basis points. Remember, the only thing that justifies a rate cut from the Fed now, the only thing possible, is a true crisis. Now, do I think we're in the midst of a true crisis? No, not a chance. Might we be there next week? Maybe, but it's a pretty hard thing to predict.
OK, more on Mark's thoughts on that subject a little bit later in the programme. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal.